Good afternoon, everybody. A very warm welcome to all the participants who have joined today's session. Now, coming to the second part, which is basically the reporting part. Okay, so the question is, why adhere to the reporting or the filing requirements? Because that is what will save your registration, okay, or your registration or your renewal in due course of time, okay. And everything right now, every registration or approval, please remember, is now having a fixed timeline. There is nothing called perpetual registration now for not-for-profit organizations. That is what is making such things even more difficult for not-for-profit organizations. Okay. Now coming to the compliance relating to reporting. So we had seen when we were looking at the registration and approval requirements, we were looking at 1023C and we are looking at 80G and 12AB and all that. Now, if you are registered on this as a tax exempt entity, as a charitable institution, what are the reporting requirements that you have to do on an annual or a regular basis? These are the ones that I have mentioned. So you will have to ensure that the annual audit report is filed by your auditor. That's form number 10B and 10BB. These are new forms that have been introduced in February 2023. So are you, if your income is more than the threshold required for the threshold of 2.5 lakhs, you are required to have an audit done. 10B is for organizations where the turnover is more than total receipts is more than 5 crores, where there is foreign contribution, and if payments have been made or if payments have been made outside India, then in that case you have to file 10B. It's a really long, complicated form now compared to what it was before 2023 February. And therefore, you can understand that the reporting requirements are also becoming more and more tough as far as organizations are concerned, as far as not-for-profits are concerned. And the income tax or any other authority, whether it's FCRA, income tax, or anybody, they are trying to only tell you the reporting is such that any mistake is something that will be reflected in the form itself. And the departments don't have to apply their mind, only they have to use the right analytical tools to see where there is a variance and raise a demand or ask for a defective return or whatever it is. I am now seeing that people, organizations are receiving lakhs and lakhs of rupees of demand because their returns or their forms have not been filed. Now, it's very important for you to also understand, you to also preview these forms before they are filed. Okay. So 10BB is the other cases other than the three. These are lesser complicated forms, but still. So the audit report is to be filed or signed off by you, not by the auditor. So therefore, it's very important to see what the computation of income is, what the figures have been filled up in the audit reports. The next one is, of course, the 10BD and the 10BE forms, which is the statement of donation. You are all aware now, every donation that you get, kind, cash, corpus, okay, donation, all that, if foreign or non-foreign or local, is something that has to be actually, you'll have to file the statement of donation by 31st May of the next financial year for the previous financial year. And you will also have to generate the donation receipts from the portal itself in 10BE. Only then those donation receipts will be eligible for benefit under Section 80G. Now, the ITR 7 is your annual income tax return. And I'm not asking you to start filing ITR 7. I'm only saying when the ITR 7 is filled by your consultant or when you provide data to fill it up, please have a look at the ITR, because if the reporting is wrong, you are the one who's going to suffer if you do not file your ITR. Now, why really? Because why are we talking about this reporting requirement from donor due diligence point of view? Because every donor will ask you about your 3 years ITR. And most donors will also want to find out, maybe even look at your portal to see whether you have complied with, the 10BD requirement, okay, or the 10B requirement or the 10BB requirement. Now, Similarly, when there is, excess of income over application, then you have two options: the deemed application under Form 9A, Form 10 for accumulation. I'm not getting into details, but this is, when you compute your income and you find that you have not been able to apply 85% of the income, is when you need to decide on one of the two forms. Now, that decision is your decision, not that of the consultant. And you have to also ensure that the 9A and 10 has been filed within time. If you do not file 9A and 10 within time, then in that case, the benefit that you want in terms of deemed application or accumulation will not be granted when your ITR 7 is getting, assessed by the department. And in that case, also you will get, a demand for tax, and then you will have to run around. 15A, 15 CACB, basically those are returns that have to be made. The CB is basically the CA certification. The CA is CA, 15 CA is when you are making remittances outside India. So that's when you have to file that and share it with your authorized dealer before making remittances. Now, these are the requirement related to reporting or filing by you. But once you have filed, do you have to be bothered what happens to your assessment? So the proceedings are equally important. The ITR 7 acknowledgement, you must keep a copy of that. Has your ITR been assessed? Has your income tax return been assessed? I talk to a lot of organizations and they are clueless as to the assessment. They don't even know. They don't even know whether assessment has been done or not. Or what is the distinction between ITR 7 and what is the distinction between IT assessment? What is this 143, 1, 1A, 2, 3, scrutiny assessment? All those things is something that you must know broadly. 9 out of 10 small medium organizations that I talk to do not know the distinction between the income tax return and the income tax assessment. And it becomes so difficult. It is, these are all red flags. Unless we are able to understand this, and when it is asked by the donor or by a consultant who's engaged to on behalf of the donor to understand all this, if we find that there is a big gap, they will then say, well, let me talk to my consultant. 2 days later, they'll come back with some ITR assessment, which might have a demand actually which they have not seen. So it only gives us an understanding that, if there is a huge demand and the department were to come after them, they will not have the money to pay the demand, nor have they contested the demand within the period of limitation. Now, in such a situation, it is very precarious to give a go ahead or no go decision to the donor, whether it has to be, it should be considered for, funding. So these presentation that I am sharing with you are presentation which you can also use as a compliance checklist every year to see whether things are happening in time. I'm giving you it in a condensed fashion. That's what I'm trying to do. Okay. Now, as far as, so we cannot get into each and every detail, but I'm going broadly in terms of what you need to see in terms of reporting. If I am there, I would always ask, was your income tax return assessed? When I'll say assessed, they will send me the ITR acknowledgement. And then they say, the ITR also at times the acknowledgement shows that the ITR has been filed after due date. So they don't know even the due date. So ITR 7, what is the due date? What is the due date for 10B, BB? What's the due date for 10BD? Now, unless we are self-enlightened or there is a passion to understand, and it's not rocket science, understand and see that the compliance has been done. Most small medium organizations, their chief functionaries are struggling because the consultants have already done it. Who's bearing the brunt? Who's bearing the problem? The problem is something that is being, faced by the organization. That's what I want to tell you. The next one is FCRA, and you all know that the annual return for FCRA is the FC4. Due date for 2023-24 is 31st. Please remember 31st December 2024. Otherwise, there is penalty. Okay. So you also have to see that the FC4 has been filled properly from the FCRA audited financials. So have you prepared audited financials? Sometimes the audited financials are half-hearted. I mean, they are not even complete. You might not have the receipt and payment. You may just have an income and expenditure. You may not, have the full balance sheet, the FC balance sheet. Many times people don't even know that what is the full balance sheet as far as FC or the consolidated balance sheet is concerned. So what we are saying is that what is the certification that has to go from the CA? Is the certification amount that is shown in the certificate and what is mentioned in the FC4 and what is mentioned in the FCRA or audited accounts, are they matching or not? I was just looking yesterday at an FC4 that has already been filed, because once you have filed it, there is no way to revise that FC4. And I saw so many mistakes in that FC4. We have no way but to, now make a record. And whenever, if there's during audit of by the FCRA, if they ask, then we will have to only say this was a mistake that needs to be condoned. What else can you do? So what I'm trying to say is that the FC4 is not a document that has to be just filed by 31st December. You have to see whether it has, see the preview of the FC4, see the numbers that have been fed, cross-check the number with your FCRA balance sheet, cross the check number with your CA certificate, and then only file. So there are reporting requirements relating to FC 6A to 6E. You know that changes in name, changes in object, changes in the FCRA bank, basically the other FCRA bank and utilization bank. That is what I'm referring to when I change in the FC bank. Officers or members of the governing or the your body, which is the governing body. So if there are changes, even one change is there, is something that needs to be even one change, if it is there, needs to be uploaded on the 6C. And there's a change now as far as 6C is concerned. Earlier the 6C used to be next 6C you could not file unless the department had disposed of the earlier 6C. Now that change has been made last month, where you can file a new 6C even if a old or a previous 6E is pending. And the previous 6E not approved will get auto, populated. Those data will be auto populated in the last 6E return that you'll file. Renewal, you remember that that the FCRA registration is for 5 years. So if your renewal application in FC3C is pending, please keep a track of the blanket permission that is given by the department up to what. So you must know that currently the permission is only up to 31/12/2024. The department hasn't come with an extension, but you must know that, because your donors might ask, your 3C is still not approved. Your renewal application is still not approved. Up to what time are you enjoying your blanket permission that the FCRA MHA has given you? That you must know. The TDS TCS related compliance is very important, and I see a lot of default here, both in terms of monthly deduction and payment to the department. First, getting your TAN, then using your TAN and the traces portal to pay your pay your challan, to file your quarterly return. Okay, the quarterly return has to be filed for in different return numbers, 24Q, 26Q every quarter, and there are deadlines. So also for the monthly challan, the deadline is 7th. Now, are we filing on time? Are we filing the quarterly returns on time? Are we deducting TDS on time? All these details are seen by the donors, and the consultants or donor staff who are sharp, they will be able to easily cross-check the TDS return with your volume, with your vendors, with your numbers, very, very easily. It's not very difficult. So they are all correlated is something we need to understand. The EPF and the ESI, if you are registered, then of course the electronic challan and return for EPF every month that you have to file by the 15th. Similarly, the ESI payment challan by 15th, and of course the ESI 6 monthly returns. The due dates I have already mentioned is something that is the reporting requirement. Okay, that is something that I want to tell you. I have seen very good organizations voluntarily opting for ESI, also claiming the ESI from their donors, and the donors are giving it to them. Okay. The next one is professional tax. Of course, the This is a state act, we know that. So you'll have to see what is the slab for deduction, so that when is it to be deposited, and are there any return requirements. So some cases there's monthly, some cases there are 6 monthly. It will differ from state to state. So you'll have to see your state act first to see whether you are required to register under PT. If you are operating in several states, then for each of those states where you are operating and has a PT, you'll have to get a registration. The Shops and Establishment Act, basically in terms of, again, the state, since it's a state act, you'll have to see what are the annual reporting requirements. There is an annual reporting on the Shram portal. So is there an annual reporting requirement if you are required to get yourself registered under Shops and Establishment? And I, in the last session, told you what to look at in the state Shops and Establishment Act to see whether your organization or your institution as a charitable institution is exempted from registration as a establishment, not as a shop, but the establishment part of the Shops and Establishment Act. Are you covered or are you not covered? Okay, many states have given exemption, many states have included them voluntarily. So you will have to see whether you are, if there is, then you will have to actually have an annual requirement. There are also requirements relating to, various provisions which should become part of your HR policy, which is mentioned in the State Shops and Establishments Act, and therefore can automatically give you those provisions as far as your HR policy is concerned. GST, again, the returns that you will file of the GST GSTR1, which is the outward supplies, the GSTR2A, 2B, which is the input that you have, and the net off of the the outward supply and the input that you get for purchases. If you are getting funds from donors, and you, please do not claim the input, because the total cost is being recovered from the donor. And in that case, you will also, the donor might already have said that where there is a credit of VAT, that credit either should be given to the donor or should not be claimed by the institution. All right. That is also sometimes part of the grant contract. So the GSTR 3B decides on what is the amount of deduction or payment that you have to make through the challan. PM06, PMT06 is what you'll have to, in terms of, the monthly payment. Then there is the monthly or the quarterly return which you will have to fill, and the annual return. Now that is provided you are within the purview of GST in terms of incidental business which is crossing a certain threshold. So you have to understand the GST, its implication. Is there a taxable supply, or are you yourself accepting contracts which are within the purview of taxable supply, whereas they should be treated as grants? The next one is gratuity, and this is one place where there is a lot of non-compliance. So I want to only say that that please refer to the Payment of Gratuity Act, which says that if your employee strength crosses 10, then you are within the purview of the Payment of Gratuity Act 1972. There is no registration requirement. So many organizations come back to us and say, we didn't know that there is a registration requirement for gratuity. Therefore, since we did not know there is a gratuity payment of gratuity registration requirement, we don't even know whether the gratuity is getting attracted to our organization. So please see your strength. Please see whether it is applicable. And if it is applicable, then we will strongly recommend that you have your group gratuity scheme and get the gratuity liability funded instead of just making provision for that in your books. And you may have difficulty in terms of your funding when the gratuity amount has to be paid. Now, a lot of donors look at gratuity. Now, how will you have gratuity? Then gratuity you will have only when you have a breakdown of your compensation or your salary structure in terms of the gross salary breakdown. Only then you will be able to calculate gratuity as a certain percentage, 4.81% of the basic salary. Now, if you do not have any compensation structure, then how will you even talk about gratuity? How will you talk about EPF? And that is why we say that in a phased, gradual manner, please take up one by one the things that you have not been. Otherwise, you know what happens? I see most donor contracts or budgets that we give as small medium organizations to donors have a lumped figure: 8,000, 10,000, 20,000, 15,000. Now there's no breakdown because internally we don't have a breakdown, and the donor says, well, 15,000 is okay, because if in 15,000 there was a breakdown, then this same 15,000 will actually become 20,000 by addition of the social security benefit. We are not complying with the social security law. We are not charging to the donor, and we are not giving the due benefit to our employees. All the three, there is a default. So what I'm trying to say is that, and gratuity is one thing where you don't even need a registration. Or somebody just goes to the commissioner and says, I have not been paid gratuity because he is done 5 years or 240 days, 4 years, 240 days, and is eligible for gratuity. And this is a criminal liability. There is a definite criminal liability to non-compliance of gratuity. So what I'm trying to say is that organizations should look at all these areas, and the donors are very smart. They all look at this. They may not ask you, but they may say you are not compliant. But what is the fun of saying that unless you yourself know whether you are eligible, the gratuity is applicable? That they will come to know, because they'll ask you for your employees list, okay, when they do your due diligence, and then they will say your employees list exceeds this much, you are in gratuity, you are in EPF, you are in professional tax, you are in this, that, whatever, you are under maternity benefit. Now, unless we ourselves know, and this is the reason why I'm talking to you about all this as areas of due diligence, as the nitty-gritty bariki of due diligence that we are trying to tell you, is something that you'll have to look at. Now, as far as the social stock exchange is concerned, is something that there is an annual reporting requirement. So if you decide to get yourself registered, which is a good business practice, then there are, declare the disclosure requirements as per the LODR, the listing and other disclosure of regulations of SEBI, which has to be complied with, which also includes an annual social impact report. Now, annual impact report, जो social impact report, अगर आप disclosure के तौर पे, if you are making this available to the social stock exchange, then you can also tell your donor, we have an annual impact report which has been done by a third party, by a social auditor. You must know, just like a chartered accountant as a statutory auditor, there is a separate institute, and there are separate regulations for certifying social auditors. Now, if you have a social audit, I mean the impact audit report, it's called the IAR, and AIR, the annual impact report, by a third party, which is a social auditor, it itself gives a lot of confidence to the donor during donor diligence that this organization is progressive. Okay, and that is also a part of the LODR requirement. So what I'm trying to say is that these are small things which give that confidence, not only the confidence for first time engagement with the organization by the donor, but by continuous engagement. So once a donor is attached to you, all these things will help them or help you in terms of retaining that donor. This is what needs to be done. And those organizations which have been able to retain donors for 10 years, 15 years, 20 years, I mean, and we are not joking. They are the ones who have ensured that there are 5 continuous donors which will give us 5 crores every year. Now that itself is enough confidence for that organization never to kind of have a problem as far as existence is concerned, as far as sustenance is concerned. Okay, that's what I'm trying to tell you as the message. Now coming to, so the B part of the compliance reporting part. So we have seen the reporting related to statutory compliances. Now here what we are seeing is the constitution document that we had also has requirement for reporting. Okay. Now where there are specific state trusts act, okay, and there is the office of the charity commissioner, there is requirement for annual reporting, and there are many more requirements. If you want to dispose of assets, if you want to do this or do that, and in terms of investments, all that state laws are there. But where there are no state laws, the trust generally as per its constitution under the default Indian Trust Act of 1882 doesn't have a annual reporting requirement. And therefore, since there is no annual reporting requirement, you can understand why donors do not consider this as a very superior form of organization. I'm not commenting on whether it's superior or inferior. That is the perception. As far as society is concerned, please look at your state act. Okay. And state acts generally say that to the registrar of society or the designated person as the registrar, two things normally I have seen have to be filed. One is the list of your governing body member as on the AGM and the approved audited financials after the AGM. These are the two things. As far as the Section 8 company, this is because by way of your constitution, not by way of your statutory registration. So many times I ask people whether there is an annual reporting requirement to any of the authorities who created you. There is no answer because they have not even found that. Immediately they will say no. I mean, the answer automatically comes as no, or it is not applicable. Whereas if you look at their laws, their state specific societies act, there is a requirement. Sometimes there may not be. Sometimes they may not be. Some of the organizations which require have a 3 year or a 5 year renewal requirement as a society, for instance, there, of course, they say that at the time of renewal, you will have to file the entire documents in a certain fashion. They may not have an annual requirement. But most states where the state societies do not have a renewal requirement, there is this requirement of having to file at least these through documents. I'm not saying this is complete. This has to be looked at by you for your specific state act. As far as the Section 8 company is concerned, this is the central act and therefore compliance is uniform across all not-for-profit Section 8 registered companies. Okay. So you have the audited financial statements that have to be filed within 30 days of your AGM. The AGM last day cannot be beyond 30th of September. So if it is on 30th September, by 30th, 31st, 29th of October is when you have to file the AOC 4, which is your audited financial, the MGT 7 within 6 months or within 60 days. That's your annual return, the MGT 7. The ADT 1 is your auditor's appointment within 15 days from the AGM. And of course, you have the KYC for these, for your directors, which is by 30th of September. So these are reporting requirements on MCA to the on the MCA portal, so that this is by way of your constitution related requirements. Okay, this is something that you have to see from the point of view of your constitution. And Section 8 is uniform. This is to be done. But as far as trust and society is concerned, since the state acts override the Societies Registration Act and the Indian Trust Act 1882, you will have to see your state specific act under which you have got constituted. You will find that your constitution document talks about the specific state act, and therefore you will have to ensure compliance. डोनर्स क्या ये देखते हैं आपने एनुअल रिक्वायरमेंट कॉन्स्टिट्यूशनल रिलेटेड कंप्लायंस किया? द आंसर इज यस. इट इज वेरी वेरी इंपॉर्टेंट that they see not only your by way of statutory regulatory reporting but also constitutional related reporting. Now coming to, so this is completes part 2 or the area number 2, which is one of the biggest areas as far as due diligence is concerned, and that I have complied with that I have categorized as compliance. And we have seen compliance in terms of constitution, and we have seen compliance in terms of reporting for the constitutional in terms of the constitutional law. Second, we have seen all the statutory and regulatory approvals or permissions, and we have seen what are the reporting requirements, annual, biannual, or as specified in the state acts. Now, this is a complete laundry list of approvals and reporting. Now, how much can you do? How much are you doing right now? The more you do, the more the checkboxes in the checklist of the donor will get, ticked. And the more the chances, or I mean, since it's then becomes a report which is mostly green, and your program due diligence is good, the chances of your organization getting funding is very, very green or very, very bright. That is what we are trying to study in this particular, these 2 or 3 sessions, the first 3 sessions of this particular course. Now I go to the other areas which also donors look at with great interest. So I have told you that we have categorized all organizational due diligence into 8 areas, and we have done 2 of them. I have to complete all 8 of them today. So besides that, we have a very small presentation on PATIC, which I told you. It's a free resource repository, and you will really like it. We have been very instrumental in creating that, and my colleague Shamir is about to come, and he's going to make a small presentation. Now, we'll do that at 4 o'clock. So now point number three is mission, vision, core values. Now, how many of us think that for the donors, mission, vision, and core value is important? It is extremely, extremely important. Why? Because the donors what they want to know is the mission, the purpose for which this organization has been set up, the vision, how that purpose will be fulfilled over a period of time, and what it, how the organization hopes to achieve the mission, what are the goals for achieving the mission, and what is the culture that the organization wants to foster, or the the way they want to achieve this mission. What is the manpower, what is the, the attributes, the attitudes, the culture, the virtues, the values that the organization will want to promote to be able to reach the mission and vision. Very important to know your values. Is transparency a value? Is honesty is a value? Is team spirit a value? All those things are very important. So you must have a live mission, vision, core statement, core values done on your organization's office, in front of the desk of each of your employees. I talk to many organizations and their chief functionaries and ask them their mission. Can they tell me the mission? They will not be able to tell the mission right away. They will say we'll have to look at it, which means your organization has not created that culture of imbibing or accepting or understanding the reason for your people to be working for your organization. And that's a big problem, because donors want to find out, is the mission, vision, core values aligned to the donor or not. That's what I've written, is whether there is alignment of the organization which they are funding versus their own values and their own kind of. Is the mission to work for gender? Is the mission to work for poverty? Is the mission work for migration, or is it to work for some kind of physical disability? What is it? What do you want to change in this world? Okay, what's your purpose? And is that purpose something that gets funded? So for instance, it's a corporate CSR. They have their CSR policy, and they have a certain list out of Schedule 7 that they are going to support. Is your mission resonating or aligning with the mission, with the activities in Schedule 7 that they propose to promote through their CSR activity? Is something that needs to be understood. Does the donor feel comfortable about the mission, vision, and core values? Is the mission, vision giving an indication of being political or party politics, or being extreme rights and entitlements? So all that is something that is very important. Every time the donor will ask mission, vision, and core values, and good organizations, their manpower will remember the mission, vision, and core values by heart. Even at night, at 12 o'clock, you wake them up and say, "What is our mission statement?" They will remember it. That is exactly what we want all organizations to do, because that gives a lot of confidence to the donor during due diligence. Next, I come to area number 4, which is basically around governance. Now, please remember that governance is a key pillar as far as due diligence of the organization is concerned, because the governance structure holds the fiduciary duty. What is fiduciary? Responsibility for seeing that the funds or the money is properly utilized. That is what is called fiduciary duty. So at the end of the day, the fiduciary duty is of the governance structure. They are also required to take care of the risk in that organization. Now, when we were talking about what are donors looking at before funding, these are the two key areas that they are looking at. And for that, who is responsible? The governance structure is responsible. Now, when I go to smaller, medium organization, whatever is written in their constitutional documents for the governance structure, so that's the general body or the governing body. Okay, in the trust, it's basically the board of trustees. Okay, in the society, there has to be a general body and a governing body. In the Section 8 company, there could be founding directors, and there could be for the board of directors, they may be the same also. So is the actual governance structure in line with what is the provision in the constitutional document? At times, because the constitutional documents are so old and they have not been looked at, there is a big difference between what the governance structure is and what is the kind of composition of the governance structure and what is mentioned in their constitutional documents. Okay, so that's the bylaws for the society or the trust deed. It's the trust deed is the association, the articles of association for a Section 8 company. It is very important for us to see there is congruity or similarity, or attention is given to the fact that whatever we have mentioned in our constitutional document as the governance structure is what we are actually practicing, and there is a lot of gap sometimes between these two things. Okay, now provisions related to the conduct of the governance, that's important. So what do we do when we do due diligence? We go there and say, well, let's understand whether you are aware of what is the governance structure as far as your constitutional documents are concerned. Many times they tell, many times they don't. Then when you ask them what is your current governance structure, there is difference. Then when you ask how is your governance structure conducting itself, what is conduct of governance? That is who are the members, what membership requirements are there as per the bylaws or the constitutional documents, who can be members, what can be the type of members, what is the requirement related to membership, what is the period for membership if there is any period. Okay, similarly for your governance structure, what is the period for for holding that position? What are the provisions related to meetings? At times the constitutional documents don't have a provision, and they attach an addendum to of these particular things separately to the constitutional document, which is not even registered. So what are the meeting requirements? And I find that there is a lot of default in meeting requirements. At times, organizational top leadership don't even remember very clearly, especially for small, medium organization. I am not critical. I am only trying to point out that each of these things has a lot of meaning during due diligence. Are you supposed to hold 3 board meetings? When did you hold 3 board meetings? Is there a requirement for gap between the 3 meetings? What is the requirement for Companies Act Section 8 to have 2 meetings and gap between 2 meetings? Okay, what is the requirement for BOT? If there is no requirement, have you made some procedures? Because the BOT meeting is part of the trust deed. It's not dictated by the Trust Act. Okay, so that's something that you'll have to see whether what are the requirements relating to minutes or to meetings, to quorum. What are the notices requirement? If you are holding meetings, what is the method through which you can hold meetings? Have the minutes been prepared? This is one particular area where the minutes are either not prepared or drafted later on when we ask them. And anything and everything is written in the minutes. There is no proper agenda. The minute book is not there. Okay, the attendance sheet is not there, or sometimes the attendance sheet and the minutes are made for the due diligence. Please don't do that because that can be easily checked by organizations. If you have not filed your constitutional related requirements of AOC, MGT, it's not difficult to find out whether you have not filed it. Okay, that is what I'm trying to say. And when you file certain requirements, certain documents, please see whosoever has filed, whether you have got a copy and put it on record. Otherwise, you will be running here and there. Otherwise, I have seen most organizations running here and there. And what it does is that we start talking to third parties and they will give your real truth. Okay, that is what I'll explain when I will talk about audits and assurance. Okay, inclusion, exclusion. What is the term of engage for period for which you that particular person will be there? Is there a conflict of interest? All those things are part of the conduct of governance. So uh, is there proper procedure laid down, and it is the responsibility of the chief functionary to ensure that the conduct of governance is as per the constitutional document. Now, we are talking about governance as one of the areas of due diligence. Okay, so let's come back to the presentation. The conduct of governance is something which where we find a lot of mistake. Okay, now the roles and responsibilities of people, are they aware of their roles and responsibilities? What is their banking related role? What is their role as a governing body member? What is their role in terms of being a member of a subcommittee? All those roles and responsibilities. What is the role of this particular person as being a member of the governing body? So what is the role of the governing body? Is the role of the governing body member? So is the general body supposed to approve the budget, annual budget? No approval taken. Okay, the general body has met, but there is no approval because you haven't seen what the powers and responsibilities are of the general body. Is the general body approving the annually the appointment of statutory auditor? The statutory auditor was appointed 20 years back and has never been reappointed. So what it only shows is that the top management of this organization has no idea or is not giving the right kind of importance to the conduct of governance. That's what we are trying to say. Okay, so again, the delegation to subcommittees is something that is also something that we see. Is the subcommittee recommendation approved by the general body, because the governing body or the governing or the executive committee, whatever you or the management committee, whatever you call it? We find that a lot of subcommittees take a decision and the decision is just not ratified. It becomes just a decision because the subcommittee is a committee reporting to the governing body. It doesn't have its own teeth. So these are some of the areas that we wanted to talk about. When I will talk to you about internal controls around governance, we will get into more deeper detail. ये बात मैं आपको why I want to tell you this is that our practical experience and wisdom says that there is lot of gap in terms of the governance related area. Coming to policies and procedures. Now, listen, policies and procedures is an internal control framework. Why do we need a framework? Why do we? Because we need people to work in a controlled environment. Otherwise, there will be no barrier. So the policies and procedures in terms of their formulation. Now, formulation, when I say, is not same as copying. I see most organizations copying policies and procedures, filing them and never following them. That's even a bigger mistake. Okay, so the formulation of policy has to be based on the organization's need, and revision need to happen as the organization evolves. So this document of policies and procedures will generally be dynamic documents. Okay, as the organization grows and evolves, your documents will then be evolving and speaking the language at the point when you have evolved. Okay, now the second thing is not only the so-called copying of policies and procedures, what is the implementation of policies and procedures? और ये मैं बात आपको from my own experience कह रहा हूँ. When they'll ask you about policies and procedures, either you will say we don't have policies and procedures, which means there is no internal control, or if you have policies and procedures, they are all copied and put somewhere in your records, never seen and never implemented. So when you procured, did you follow your procurement policy? There is a certain procedure in the procurement policy. But your document relating to procurement, your document relating to expenditure, your document relating to travel does not corroborate or does not align with the policy document because it has never been followed. Now, that is even a bigger red flag than not having policy. That is what I want to say. Now, as far as policies are concerned, I have categorized them into two: statutory and others. So the statutory has three policies that I've taken out. One is the sexual harassment of women in workplace, prevention, protection, and redressal. This is the 2013 POSH Act. It's a mandatory statutory policy that has to be there for each organization, and those organizations which cross a threshold in terms of the number of employees, then you have to have the internal committee, the complaints committee, the internal ICC. You will also have reporting requirement in terms of making an annual report. So please remember, this is a statutory policy which every organization must have and practice, not have. Have is one part and practice. Did you hold meetings of the ICC? Were any cases referred? Was the POSH policy gender neutral? It can be for both male and female. How does it matter? So, but did you have that policy? Did you have that as a statutory policy required under law? So the second is the apprenticeship policy, which I have already mentioned to you. And the third is the child protection policy, which is a constitutional requirement. Now, each organization in our understanding should have these three policies as a matter of must policies. Then you come to the other policies, which is, of course, your finance policy and your HR policy. We know these HR and finance policy is required by donors, but are the donors asking you for POSH? Some donors who know this is a statutory policy are asking, but not all. But the finance and HR policy are two documents which generally most donors will ask. Now, don't come up with a copycat policy. Have a policy which has been prepared by you, which has evolved with you over a period of time as you progress. Only then you will have the right kind of internal controls. The diversity, equity, and inclusion policy, the code of ethics or conduct policy, the conflict of interest policy. Now, this conflict of interest policy should also cover your governance, because governance may conflict of interest cases should also be part of conflict of interest. Risk management. I said the governance has fiduciary responsibility and risk management. Now, many donors ask for risk management policy because the risk that NGOs, NPOs are confronting today should have a risk management policy in terms of safety and security of their funds. Now, risk management policy is not a statutory policy, but is a must policy which donors are now asking, because all donors are looking at the word risk, and therefore the second part of our uh, 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 discussion will be around in what are the internal controls for risk. Okay. Now the other one is the IT data security IT policy, which is your information technology, your data security, your data privacy, including the DPDP. Okay, the personal data protection, whistleblower policy, anti-bribery, anti-corruption, lobbying. This is mostly for international funding, terrorism financing for US grants. Okay, there is this list for terrorism funding for countries that are there, and you'll see whether that will be part of the contract or the grant contract by such organizations. Now, what we also say is that the policy should be in simple language so that the compliance can be ensured at every level of the organization. Therefore, to have policies and procedures, and the second part is to follow, I mean, in practice or to practice policies and procedures, not difficult to identify whether the practice part is being done. And the practice part will give you the brownie points as far as donors are concerned. Coming to audits and assurance, that's the sixth area. Is audit promoted by organizations? Now, I mentioned the types of audits. Okay, I'm not repeating them. You have the statutory, that's the annual, the internal audit, the donor audit, the FCRA, the CNAG, if it's a government promoted institution. Okay. Now, what I wanted to tell you is the statutory auditor appointed by the general body? Okay, does the auditor have a formal agreement? All these things are sometimes which are overlooked. There is no document to show this. And statutory audit is statutory business which is part of your constitutional document. Okay, what is the audit process? What is the periodicity? What is your management representation? What is the management letter that the auditor has given? What is the auditor's report? Content of the auditor's report is like, what are the financials that are attached? Is the audit report with the UDIN number? Sometimes the UDIN number is not there. Okay, but all auditors are supposed to issue the audit reports with UDIN, registered with the UDIN portal of the ICAI, the Institute of Chartered Accountants. Okay, sometimes you will find there is no UDIN there because you don't understand there is the UDIN requirement and the chartered accountant. Sometimes UDIN is bypassed because you are making the financials in a later date. All those things is something that can be easily caught and give you a negative marking. The annual action taken report. So the red flags and adverse comments or litigations or any adverse action against governing body is something that will come out of the audits. Okay, and the donors love reading these audit reports. Okay, the assurance is slightly different from audit. Audit is more focused. Assurance is basically an idea as to what is the comfort level broadly with the organization. So it's more at the organizational level, and therefore that's the difference between audit and assurance. Uh, as I said, audit and assurance is a proxy indicator. Okay, what is it? It's a proxy indicator to go or no go, because it will contain all the deviations or red flags or observations which help donors take a call. Okay. Uh, Now, I want to mention something here as far as audits is concerned, and that is that you must always be in touch with your auditors, because if your information that has gone to the donor, if the donor is not satisfied and you are not able to give answer, many times the donors, because the auditor's numbers, telephone numbers is all there on the independent practitioner's report, because that's on their letterhead. Sometimes they will go directly and talk to the auditors. The auditors will not know what they are asking, and they will generally tell the truth. Now, the truth might be very different from what you are telling them, and that becomes a very major issue. So your coordination with your auditors has to be of a very good quality, because I have done that where, as a donor due diligence, I have talked to the auditors and the auditors have given me the real story, which is very different from what you will see when you will see the paper or the document. But the actual story is very, very different. So at times we are able to get a lot of information, not just from the audited financials, okay, but also from the auditors themselves. And therefore, you have to keep that alert. The seventh is your institutional area is your financial statement. So the previous one was audits. Look at audits, look at your audit reports, look at your action taken. The what is the outcome of an audit is the financial statements. What So please remember that the financial statements have, if you are FCRA registered, has to be separate for foreign contribution funds and the amalgamation of foreign contribution funds to the overall audit report. That is your financial statement. This financial statement is what I call as an insight, or as a probe, or as a lead to let us know what is the state of financial health of this organization. So whenever I look at an organization, the first thing that we ask them is the audited financial statements. Okay, because the audited financial statements of the last 3 years is generally what you are used to. Now, most small medium organizations don't pay attention to reading or understanding the state of financial health, although their chief functionaries have signed the balance sheet or the financial statements. Okay. So on annual financial statements, what are they doing? First, they give us a pulse of the organization. What is the present state? They disclose to the public because these are public documents. But what do they, two things that they do, the financial statements. One is You feel the pulse. So I can sit here and read the financial statements. I also have access to the auditor in a certain sense because I get the details of the auditor. What is the present state of this present state of financial health as of now? That's the pulse, okay? And what is the direction of or future of this organization? This because this is what I call as the top level report of an organization, okay? Now, as I mentioned here, point number B, please understand your annual audited financials. At times when we talk to leadership, they struggle to read. They try. We say, what is this or this particular figure telling us? They do not have any answer. They are not able to interpret, they are not able to respond to any of those queries. Now that gives you an idea as to what is the involvement of this leadership of this who are in fiduciary position into the construction of these financial statements. Very important to give, very important for someone to understand. Even finance people don't look at the financial statement. Although at the end of the day, all work that the finance people are doing is finally coming as a summary in the audited financial statements. So the audited financial statements is an area of what is the pulse of this organization, what is the state of financial health, and where do we look at this organization in the coming few years. Is that not good enough kind of a material for the donors to decide on go no go? It is, okay, but you should be able to have understanding of the financial statements, okay? So generally it's meant for asked for 3 financial years. Some of the good uh, uh, organizations or donors also ask for what is your projected financial statements for the next 3 years. So sometimes the 3 years financials will be able to give you a future direction, but some of the donors are also asking, well, if I am making funding, then what is for the next 3 years? Then what is your own assessment of your financial health in the next 3 years? And they ask for a funding kind of a pipeline to that extent. Now, period of association of auditors, when we talk about financial statements, is very important. Many organizations have never rotated their auditors. It's the same auditor that has come, or sometimes they have rotated them every year. So there is something wrong in both those situations. Now, the Trust Acts sometimes might talk of the minimum number of the engagement of auditors. The Trust Act 1882 does not, the Societies Act may not, but the Companies Act for Section 8 companies says that you can have an auditor for 5 years, give them 2 terms, not more than 10 years at a time. Is something that you'll have to see. So neither too long engagement nor too short engagement for audited financial statements is what we are actually telling you. Now, ये तो हम आपको बता सकते हैं. Whether you are able to do it or not is your decision. What I'm only trying to say is these are soft touch points which every time a donor looks at, they will see these small touch points, and these touch points tell the real story. Now, the key components of financial statements are, of course, the balance sheet, which tells you about the liability and assets. And I see most of the time the top leadership being clueless in terms of what these numbers are on their balance sheet. मैं सारे नहीं पढ़ रहा because I don't think we have time for all this. So the balance sheet tells you the state of your assets and your liabilities as at a particular date, okay? As at 31st March. So as that is as on a particular day, not during a period. आज के दिन, today, this is our position in terms of assets, what we own. This is what we owe as liability. And the difference between assets and liability is our capital. What in the language of not-for-profit we call as net worth. We don't call it capital in a certain sense. This is our net worth because we haven't earned it. Therefore, we don't call it capital as such. Okay. And there's nothing like capital because the capital has not come by way of any shareholders contributing. So that's how we are talking about the capital part of it, which is your net worth, which means this is the amount of money that is available, which does not have to fund or feed or discharge a liability. The second, of course, so I'm now kind of, gearing it up, you please read the presentation. The income and expenditure statement. Again, the income and expenditure statement is not as per heads of income. It's the commercial terms. What is your income? And what is your income? Your income is your grants and donations. What are the trends of that grant and donation? Very important. Sometimes donors will say, I will not fund more than 20% or 25% or 15% of the total donation grants and donations. So that becomes a restriction. Okay. What is the expansion of the donor base? Do you have just one donor or do you have multiple donors? Okay. Excessive cash donations or subscriptions, we see that as happening. Just to increase the balance sheet size, there is lot of cash donation. Now, cash and anonymous donations are two different words. Can cash donations be taken? Yes, cash donation can be taken with restrictions of 269 ST of the Income Tax Act, but there is no bar on taking cash donation. Anonymous donation, of course, where you don't know the name and address of the person, and you may take it in cash. So anonymous donation, there is a certain limit beyond which if you take anonymous donation, there is taxability at the maximum rate of 30% plus surcharge plus cess. So please remember these points are when they see your income and expenditure, they will see these things that they will see. They will also see whether you have other incomes. Does it help in terms of become giving you a buffer? Expenditure. Now, expenditure, when we show expenditure in our, and sometimes the financial statements are so badly presented. Very sorry, I just lost my connection. 1 minute, I'm just putting it on. Okay. Uh, all right. Uh, we were on the financial statements and we were talking about the INE statement. Uh, can you see the INE statement? Can you listen to me?
Sharad, your audio, we can listen to you, but video is not visible. Like screen is not visible.
1 minute, just give me 2 more
Yeah.
seconds. I think I'm struggling today with uh, the connectivity. Twice it has.
Now it is
I'm
visible.
sorry about that. All right. So what I'm trying to tell you is, and the next slide shows some more indicative ways why how auditors or how donors look at the audited financials. But that is why I'm actually not doing the INE and the RNP in great detail, but I'm only trying to say when you're talking of expenditure heads, I'm extremely sorry for this interruption. The presentation is based on functional and not natural heads. Most of the time, the financials are based on natural heads, like salaries will come there on the expenditure side. We are not meant for salary. We are meant for the why of the donation, which is program or administrative. And sometimes these salaries that have been given, some of the smart income tax authority, income tax officers have denied payment of salaries because they have not been able to relate it to program delivery. Anyway, so I am only trying to say that right now. You have to be very careful. Now, surplus and deficit, which is the income, excess of income over expenditure or the excess of expenditure over income, and you will have to show it appropriately in the balance sheet. Now, it is very important that whosoever is preparing the balance sheet and is conversant with the balance sheet should answer to questions on during due diligence on the balance sheet. And that should be one person who should not be struggling or saying, I will talk to the auditor. The donor will directly talk to the auditor and get the truth. Okay, so you'll not be able to even cover up. That is what I have done. And the organization has no clue. So I tell them this is what is wrong with your financials. They have no answer. So you'll have to become very smart. Receipt and payment is basically your movement of the actual receipt and payment and not the accrual basis. Accounting policies and notes to accounts. Most organizations do not pay attention to that. They have no schedule for accounting policies. How are your financials prepared is based on accounting policies. What are your accounting policies to say how will you recognize revenue or income? So you will have to follow the standards that have been laid down, the accounting standards that the AS that has been made by the Institute of Chartered Accountants. How have you recognized fixed assets? How have you recognized depreciation? How have you recognized deferred revenue? How have you recognized, employee benefit? No mention. Okay, so you don't even know how these have been computed. Similarly, notes to accounts actually means that if there is some specific area that you want to give as an explanation to the person who's reading your financials, that's where you have that liberty. That's called notes to accounts. So some particular thing where there is a major change, major variation, you are there allowed to put that as a notes to accounts and explain to the public, to the external audience, to the outside world, this is what is the reason for this variation. Very good for us to know that. Now, what do donors look at in audited financials? So audited financials तो हो गए. सबसे पहले तो audited financials के अंदर, when you ask a certain question, whether there is a spontaneous response or not, to an intelligent, sensible question is the first point at which you will get the marks or you will not get the marks. Now, what is the donors looking at in audited financials? Now, the size and volume trend is what they get to know from the audited financials. And how much should I commit? How much net assets or free reserves is available? So any contingency, are they neck to neck? Is there no buffer available for this organization if there is a certain problem, or is there level of investment? Do they have free reserves which they have invested and that becomes a rainy day fund? Fixed assets, particularly land and building. What are the fixed assets that are there? Okay. Level of cash in bank. How much is the buffer in terms of meeting current expenditure? Unutilized grant. How is the unutilized grant so is a big figure? Okay. Or is there grant receivable? So that's the opposite of unutilized grant. Grant receivable means you have spent the money, but the money hasn't come. Both are red flags. Okay. Proportion of grant and other income, including donations. So what is the relationship between grant income and other incomes? So the other incomes would be by way of rent or interest that you must try to create as a buffer so that the proportion of grant and other income is a reasonable one. You don't seem to show in your financials or indicate in the financials that you're completely grant dependent. Breakdown of expenditure, program versus admin. So the donors will be able, once you show it by the functional heads, that is program and admin as two heads of expenditure, the donors will be able to find out how good you are in terms of your program, in terms of the grant being spent for program delivery. Okay, So if the admin cost, if the admin portion of the total grant expenditure or the overall financials is about 30, 40, 50%, then there is some problem, because it should not in any case be more than 15 to 20%. The FCRA says 20%. So which means 80%, 85% of your total expenditure should go to program. Now that will not be possible if you do it by heads on what it was spent, but why it is spent is what will show how efficient and how effective you are in terms of utilization. Current assets versus current liabilities. So current assets other than cash, I said. What are the current assets? Loans and advances that you have given, grant receivables versus current liabilities, what you need to pay, what you have not paid. What is the relationship between those two? Is there current liabilities where there are no commensurate current assets or cash? Big problem. Donors require 3-year projections of fund flow, as I mentioned to you. Why they require is what they want to understand, what is the pipeline visibility for this particular organization in terms of the next 3 years. Now, many organizations have no idea because they don't have the idea of the present also. So I am not saying do it today, but start thinking. The last point, which is point number 8 that we are going to do, very, very important, and we pay very little attention to this. This is what I call as market due diligence. Market due diligence. मार्केट में हमारे बारे में क्या इंफॉर्मेशन है और what are people in the marketplace telling about us. That's market due diligence. You will never find this word anywhere. Okay, but the visibility and reputational, what is our reputation? You know, big organizations are very conscious about their reputation and image. So the visibility and reputational is a very important area. What is your website? Have you made a website? Is your website talking about your statutory registration, your annual report, your audited financial statement, both your consolidated financial statements on your FCRA? Okay, those are proactive disclosures. Is the website talking about, your donors, your accreditations? Are you accredited to other institution? Okay, have you got awards? What is your partnership and collaboration strategy? I mean, strategic partnerships and collaboration, are they visible somewhere? What is your presence in social media for demonstrating your scale and your delivery of service? And also to get some idea about what are the stakeholders' assessment about you. Then publications. Can you show that as part of your website disclosure? Testimonials, very, very important. What are the donors talking? What are the other stakeholders talking about you? Can you bring that in your website? I don't know. I don't have a website. What do we show in our website? Nothing is there to show. Now, if that is the attitude, then what does the donor do? When you tell me that there's a website, I will invariably go to your website and try to understand what is it that this organization does. It gives you a different level of exposure to the outside world. Even donors look at keywords to say this area, this geography, this particular cause are their organization. But if you don't have a website, how will you pop up there? Okay, if you do not have a social media handle for any, especially for LinkedIn, okay, how will you? It doesn't cost much. It doesn't cost much. It is a thinking process. Intellectual property, if there is anything, I sometimes find that the address and contact numbers, okay, of registered offices is also not matching with your standard documents. Okay, so what we try to do is also see what your office address is there in your annual report, in your statutory documents, what you have shared with us, what we have seen when we have gone to your for site visit. Everything very, very important. Similar to that is the name, contact details of the chief functionary, okay, or the point of contact. Sometimes we struggle there. So any IEC, the information, education, communication material which demonstrate our ecosystem engagement. How ecosystem engagement? How will it demonstrate? Your stakeholders will demonstrate. Your work will demonstrate. Your publications will demonstrate. Your testimonials will demonstrate. Any innovation in your approach or in your interventions if there is innovation, that's something that the donors love. So what I'm trying to say is I've put all this together in terms of visibility or the market due diligence. Every part of this A to K is very, very important. Now, I think uh, now I will close the presentation at this stage. The coverage of this presentation has been the areas, institutional areas that donors look at, and we have covered 8 areas. Okay, the 8 areas are constitutional. Second is statutory and regulatory, big area. Third, governance. Fourth, what did we say? Fourth was, third was, of course, our mission, vision, value. The fourth was our governance. Fifth, policies, procedures. Sixth, audit and assurance. Seventh, financial statement. And eighth is our visibility and reputational. All the checklist that you will get from your donors, and we will share at least half a dozen checklists anonymously with you at the after session in session 3, and you will find that all these 8 areas is what is the coverage for organizational due diligence. All right. So I close at this. This 8 areas in terms of the PPTs also become the areas in terms of how you can start beginning or continuing with the compliance. All right, on each of these areas. So I'm going to take up the internal control areas. So this is the institutional area. So this is the foundation. This is the framework. Now, is the framework or foundation functional? Is the area which is the internal control there for all these registration requirements that are there, or not? What are the risks that are there? What are the internal controls are there or not? This is the foundation. And now the moving part is the internal controls. Are they there in the organization or not? Is the second bit of the due diligence as far as donors are concerned, is what we are going to do in session 3. A bit of it may overlap, but there's a lot of material that I can share, that I'll share with you, which is our experience, practices that you need to understand and follow, is what we are going to do in session number 3, which will complete our first part of this particular course. So I'll close the presentation. Next week, I'm going to come back to you and continue the last session on what internal controls donors look at and what you should be mindful of as a practical guide. Anyway, thank you very much. Have a great weekend. And I wish each of you and your family a very, very happy new year, a great year 2025 ahead for all of you. Thank you very much for coming.